May profits be upon you. Yeah, yeah. I am now live and very upset because I thought I was live for about 2.5 hours. I just gave a lot of information. Hi, Nebraska. And I just gave a lot of information. I thought I was live and I wasn't. Uh, and you know what? I'm a little upset. But may profits be upon you. I'm live now. I'm getting things ready. May profits be upon. Uh, I'm going to now. I'm going to just give people notifications uh, that I am live right now, and me and my silly behind thought I was live for a good while, and I'm glad to see you. Glad to see you. Some people made it, Nebraska. There were some people here earlier, and I gave up. I can't believe I gave out all that information, man. I cannot believe I went through all of that information and none of it made it to none of it was recorded, none of it. But I'll get past it because I think this information I have is going to be pretty important because I think next week is going to be a very profitable week. Now, uh, let me start out with the RT money meter. The RT money meter tracks the rate of change of each individual currency future on a 15 over a 15-week period, and I update this every week so that I could rank the currencies in terms of strength and weaknesses. All right, now, who's strong, who's weak. All right, and I want to see just how they're progressing. That's why you see 3 weeks here, uh, 2 weeks ago, 1 week ago, and this last week, right? And what do we see? We see the strong from last week got stronger, and the week got a little bit weaker. All right, except for yen. All right, the yen was at 181 2 weeks ago, 0.60. Actually, this was 2 weeks ago. All right, this is 3 weeks ago. The yen at 181, the yen at 0.60, and this week is at 370. That was a pretty nice size leap to the upside. It is trending higher. All right, the euro, the Swiss, the euro, you can see is at number one. It was at number one last week. This week, the Swiss takes over the number two spot at 6. Right, look at the Swiss on December 3rd. It was at 2.27. Then it went to 3.43, and now we're at 6. I mean, that is a pretty nice size. It's getting stronger. It is trending up. You understand? All right. What I want you to notice is who's high on the list, who's not. Aussie, CAD, these are commodity based currencies. The yen is a safe haven. US dollar, another safe haven. The Swiss is a safe haven. Two safe havens got stronger. The commodities based ones got weaker. And I'm looking at the New Zealand dollar. This is an odd one. All right. Why? Because it was really strong last week. Very strong. And the week before. But it went from 395 on the 3rd of December. All right. It went from 395 to 466 to 448. This is kind of, it represents to me an ascension and a leveling off. And I talked last week about it rounding over, and we'll talk about it once I look at the individual currency futures. All right, let me get to the individual currency futures in there. All right. Now, as far as uh, the calendar and everything for this week, you're looking at Monday, Tuesday, Wednesday, right? And the only thing is the Bank of Japan on Monday is going to have an interest rate decision, all right? And that is one of the ones that is getting stronger, all right? I want you to pay attention to that, okay? But as far as uh, the RT money meter, I want you to just notice that we may be switching from a uh, risk on kind of environment to a risk off kind of environment. I think we're about to shift. Why? Because the CPI data didn't give that boost to the equities markets, didn't give that boost to send them up, to send them bullish, to get the buyers in control. All right. Uh, if the CPI data came in cooler, showing that inflation cooled off a little bit. However, the FOMC, all right, the statements coming out of FOMC were still hawkish. All right, and that threw the equities back off. All right, and I believe we're going to see some follow through with that risk off sentiment that seems to be setting in right now. All right, so uh, we'll take a look at it. We'll take a look at it. Um, what do you call Nebraska? We'll take a look at it. Okay. Uh, uh, so so I'm gonna look. The CAD and the Aussie are two of my favorites going into this week. The U.S. dollar is one of the ones that I'm finding most interesting, but these two, I want to short the CAD and the Aussie. I want to short against it. I want to long the yen. I want to look cautiously to short the NZD. All right, and the Swiss, I definitely want to long. It's one of the stronger ones. What the ones I want to put against the ones that are surging up are the ones that are surging down. You understand? I want to put the ones that are getting weaker against the ones that are getting stronger. Right. So let's look at the euro first. All right, the euro. Uh, Listen, I don't need your comments, drunk. All right, I already apologized. All right, I thought I was long. I just did 2.5 hours, man. I lost my voice and everything. Drunk, I want to put this information out though, so I'm willing to put out another hour. You know what I mean? I'm just going to do it because I want it on the record. I want to get this video out. So let me run through this. All right. I'm trying to troop, man. I'm trying to troop. I'm trying to, but I appreciate you showing back up, man. Thank you. Uh, now let's take a look at the euro futures. All right. I'm going to run through this pretty quick because I got a lot of information to give. All right. If you can see that the the euro is made a low and swing high, and we broke structure to the low. Right. All right. So on the daily, we have lower lows and lower highs, and then once you break structure to the upside, you're saying, okay, we have a shift in the market. All right. Why are we shifting in the market? Possibly to make a lower high because the overall higher time frame, what do you call the higher time frame um, trend is down, right? And we've seen recently euro pick up, turn bullish. I'm looking for this to possibly be the area that will turn price around because this is supply. This is a swing high. All right. And we've already come back. We've already uh, corrected a very, a big move, a bearish move. We're in correction of that bearish move. And we are in premium price from this high down to this swing low, right? We are in premium area. This is where you want to take shorts. So I'm looking to I'm looking to see, all right, we don't want to pick a top or bottom because that's where you can get in trouble of trying to pick tops and bottoms. You want to look for confirmations, all right? And on the daily, what we can see is last week we had two bearish candles, right? Look at this. Look how this bearish candle. All right, you just want to give me a hard time here, right? You see how that bearish candle totally engulfs the previous candle, all right, into a fair value gap. All right. I'm looking for price to either take out this high and continue higher, or show that it can't. It's too weak to make a new high, and that we'll see price to come down lower. The deal is there's a lot of liquidity here, and we are at a point of supply. So I'm definitely looking for price to show signs that it may be heading back down this way. And where I will see that is on the 4 hour. All right. I'll see that on the 4 hour and 15 minutes. But right now, because price didn't take out this high and we have an inside bar here, I'm looking to see if we're going to get bearish candles after this. All right. Taking out this low. Once we take out this low, it's on. It's on and popping for me. All right. Once we get a bearish candle, a daily break and close below that low, I'm looking for the pullback for a swing trade to the downside, and I'm going to hold that trade throughout this move to the downside. Why do I think it's going to sweep all those lows? Because this was the last major breakout. All right, and that's price has a habit of returning to those breakout areas. So I'm looking for price to come back here. All right, somewhere in this area, and I want to take that. I want to take that there, but we have to see if the price will definitely round over here. That has to be. I mean, you got to be careful, man. You just can't jump into shorts. If we go to the 4 hour, excuse me, I lost my voice earlier, so uh, I'm looking. You see how price is coming down here on the 4 hour. This is a very interesting look. All right, I don't see the demand zone here to turn price back up this way. I'm looking for price to continue down into this. All right, we may get a reaction here, and this is where I'll take that low. I'll take that failure to make a new high. I'll take that failure and snap it off. All right, that's where I would want to short. But that'll be my signal to short against the euro. These are the futures that we're looking at. Right, look at the Swiss franc futures. All right, Swiss franc. All right, you gotta say it fast. Swiss franc. All right, Leslie. Glad to see you here. You see that candle? I mean that candle, that arrow there. That's because I believe this is going to go long. Swiss franc is strong. All right, look how this high was taken out. All right, after this low was made. All right, this is a break, a major break of market structure. It had a lot of trouble getting past this low. All right, these lows. Finally broke past it. The price chopped its way up in correction. All right, to what? The breakout area, and then fell again. All right, we got a lovely, well done double bottom. Right, everybody likes a double bottom. Everybody likes to trade a double bottom, right? Right, but for me, this is a This is a liquidity sweep, and once price breaks that low for liquidity, you got to expect a pullback, and that was a strong impulsive move. All right, and then you think, okay, I'm looking for the correction. We have a higher high being made into this supply. All right, this is supply getting eaten up, and I believe this supply will fail, and I believe price will continue up. That's why I am bullish in this. You should be buying Swiss franc futures. Period. End of story. Let's go to the pound. All right, the pound. We saw this last week. All right, we saw how price had a major breakout label right here. All right, we saw the interest rate already. Get out of here. Let's get you out of here. All right. Price comes down, right? And then we see the correction. Now, some people are saying we should be buying the British pound. This is a reversal and all that good stuff. Hey, it is kind of a reversal, but it's a correction, man. It's a retracement. All right. And you're looking for the point where price will find its resistance, so to speak. This was it traded back into the supply. All right. This is the supply zone. It traded back into the supply. I talked about it last week. That's why you see a check mark here. I said price was going to come up and take out that liquidity here. That's why there's an X there now. All right. Last week it was an S saying, oh, there's liquidity here. All right. And I had the zone marked out like so. Okay. I said price will come up to the midpoint. All right. And I gave a number, 1.2500. All right. Where did we come? Almost to the pip. Almost to the pip. All right. If you benefited from that analysis, make sure you leave a comment and hit the like button. All right. That's what the check mark's for. Okay. So price does come up, sweeps that high. Great. Mitigates the supply zone in the extreme and fell. So I'm looking for price to continue bearishly from here. That's what I'm looking for, some more follow through, because I believe the pound is weak. All right. The pound has found its ceiling. All right. And I believe that we're going to see some follow through from here. So, all right. And I have my area designation right down to the 1.1600 area, because there's a lovely fair value gap to fill there. And I know Leslie likes those fair value gaps. All right, so I got a red mark, a red arrow up there for a good reason. All right, let's move on to New Zealand dollar futures. This is very interesting, folks. You know what I forgot to mention? God dog it. All right, I forgot to mention the COT reports, each one. All right, the COT report for the Euro futures, 68% are still long. 68% of banking institutions are still long, right? But they're closing and opening equal numbers of longs and shorts. So that's not helpful. But they are 68% long, but we have found a supply zone. This price might shoot through here, very well could, but they have closed 8,648 long positions. All right. They also closed short positions, but the fact is they've taken profit here, okay, with these long positions, because they've been long since the 15th of November, adding long positions, and now they're starting to take profit there. You understand? That's where you see it. All right. So on the Swiss franc futures, all right, the banking institutions are 87% short. 87% short. All right. They're opening and closing low numbers here. All right, but they are short in this. And you see the rejection here? That's fine. All right. But look at the double bottom. We already talked about this double bottom. All right. We already talked about the fact that it took out that swing high. All right. Swing high. When you break structure like this to the upside, you expect follow through. All right. It may come back down here and then here. All right. It may come here and then we're going to see more up. This is indicative of a bigger move. You understand? That's a big old double bottom. That's all I'm trying to point out. All right. Now, what the pound, 64% of banking institutions are short. All right. 64%. That's the vast majority. They added long positions, 3,400 of them. Right. They also added short positions, 1,000 of them. All right. But look at this. Look at that rejection from this supply. You understand? 64% short. The majority are short. This is a mitigation of an extreme of the of this supply zone after a sweep of liquidity. I'm looking for further downside, more follow through bearishly. Now, we'll finally get to New Zealand. All right, 58% are short. 58% they've opened 3,398 long positions. They've also opened 4,400 short positions. That's not helpful, right? You can't look at that. you got to look at the 58% short. They are still short, the majority of them. Why? All right. Well, maybe it's because price has the last bearish or the last or break of market structure is to the downside, right? Then we have a correction. All right. Now this correction looks impulsive, doesn't it? That looks very impulsive, doesn't it? All right. But we are in the premium price of this trading range. All right. This is where I would look for that rounding over that I spoke about last week. That's why I got another check mark on this one. All right. I said price is likely. This is a yeah. This is where I before this candle was formed. This is where I gave this that arrow and gave the analysis last week. I'm hoping that most of you remember. And then price sweeps the high and then mitigates gives a deeper mitigation of the supply zone, and price is rounding over. So I love this bearish engulfer. I love it, and the fact that it's sweeping those lows. I'm looking for this low to get swept. I'm looking for that low to get swept. I'm looking for follow through in New Zealand dollar. I think its ascension is leveling over, and at the very least, you can see that price has lost its momentum up, and we see price starting to break market structure to the downside. All right, I'm looking for price quite possibly to form a flag of some kind, and then we can see more. We can see it turning over more. We may see it pop up just a little bit more, and then it's okay to start shorting against the New Zealand dollar. That's all I'm saying. Short the New Zealand dollar. Hope everybody's paying attention. I hope you like what you're picking up what I'm putting down. All right. If you are, smash the like button and tell a friend that there's some guy over here spitting facts. All right. So let's move on to the Japanese yen. Japanese yen. Let's take a look at the Japanese yen. All right. We get to the comp report. It says as of last week, they're 77% short. The institutions are 77% short. They've closed 1,299 long positions and added, they've actually closed 14,000 short positions. Why are they taking profit on those short positions? Why? Why? Why are they 77% short? Huh? Talk to me. Talk to me. What do you think? What do you think? The 77% short, the vast majority are 77% short. All right. Why are they taking profit? Well, let me show you this. You can see the swing low was taken out. Price pulled back, came down, and then we started breaking internal structure to the upside. That's beautiful. All right. Price pulled back after this impulsive move. We corrected. Cheers. Because yen bonds suck. Oh, okay. Well, all right. I got you, option farmer. All right. All right. So we make a higher high into mitigating this zone. And then I'm looking for price to either start to pull down. We see some follow through after a mitigation here, or not. And it seems like it's more or not. All right. There is no follow through. We did pull back. We did get a correction. I believe we are going to take this higher. What makes you think that? What makes me think that? I'm looking at structure. I'm looking at the weekly. Hello, can I look at the weekly? All right. If you see the weekly, you can see that price didn't give a very strong, if I can get to it, we didn't get a very strong reaction to this supply zone. All right. And there is a supply zone that I believe we're going to get that reaction from up here. All right. I believe this may be inducement for this one, and that price will continue higher to mitigate this high. All right. Sweeping the high here. So I'm looking to long the yen. I'm looking to long the yen. I got to break it down to you, option farmer. I got to break it down to you, man. You know what I'm saying? Leslie, I appreciate you. Thank you very much. All right. Glad to see you all are here. Glad to see you guys here. All right. I should have been here 2.5 hours ago, but I messed up with my technicals and I gave a long 2 hour, 2.5 hour webinar that nobody saw because I was not recording, apparently, and I was not broadcasting, thinking that I was. Silly, silly me. Let's move on. The Aussie dollar. This is going to be a very interesting one. This is one of my favorites. I hope you're paying attention. On as of last week, banking institutions are 67% short. All right. They closed 509 long positions. And they also closed 3,200 short positions. All right. They are 67% majority are short. All right. There's a reason for that. All right. Why did they take profits on their short positions so far? Because they have so many. That's why. All right. Look at this. This is the weekly. Look how the week closed. All right. Bearishly, and it engulfed. Look at that. Look, it took out the highs, swept those highs, and then it's not, classic engulfer. All right, here. All right, but I love to see when a bearish candle after a series of bullish candles, and when price is showing that it's lost its upward momentum, and the last candle, the last week was closed bearishly. Let's look at the daily, and we'll get a very nice picture here. You see that bearish? That is a bearish engulfing candle. Okay, and you see how powerful it is because it took out uh, this market structure there. All right, it took out that low. All right, and I'm looking for this low. I'm looking for this low. I'm looking for this low. I'm looking for this low to get swept. All right, into this demand. I'm looking for price to turn around here. All right, shorting against the Aussie is what I'm talking about. All right, shorting against the Aussie is what I'm talking about. That's why that red candle is there. I mean, that red arrow is there. You understand? I hope you do, because this is classic stuff. High, high, high. Three pushes into this supply zone, and we're breaking structure to the downside. I'm looking for a price to pull back up in correction, and then down. That's what I'm looking for. All right. Easy to follow so far, right? Easy to follow. Okay. Let's go to the Canadian dollar. Let's go to the Canadian dollar. All right. The Canadian dollar is another interesting one. I'm telling you to look at it for this week. Short against it. Why? Because look at this. Look at that impulsive move. All right. All right. And that was the bearish, breaking market structure and everything, right? We broke here, we broke here, we broke here. I love this. All right. Impulse, correction. All right. And what is this correction? This is nothing but a bear flag. All right. And then we see how bear flags do follow through. All right. We are now contacting demand, but we've contacted it already. And the reaction is not very strong now, is it? All right. Look at this. This is all mitigation of this demand zone. All right. A demand zone, by the way, a demand zone that way that did not have a significant sweep of liquidity. So I expect it to fail. I do. And I expect price to continue down. Okay. So it could continue down on the open from here. That's all I'm pointing out here. All right. Uh, I'm looking for that. That's why that that red arrow is there. All right. We're going to move on to the US dollar. US dollar needs a quick look. All right. Look at the monthly. All right. The US dollar, 75% long, 75% long. Why? Why is the majority still 75% long? Why? All right. Look at the numbers. 2,600 opened in long positions, 1,700 short positions open. That's not help. That's not helping. All right. But they've added more long positions. All right. Look at all these minuses up leading up since the November 15th. They're closing their longs, closing their long, close their longs. Now they're adding. They started adding. Okay. Why? Why do you think that is? Why am I talking as if I'm in a closet and I'm trying to keep things a secret? All right. All right. I don't understand. All right. So the monthly shows what? A monthly break of market structure. Yeah, right? Here, look at that. All right. Look at that. Boom. Boom. We finally broke through. All right. Very nice. Very bullish. This is a monthly. These are monthly candles. All right. At 3 months of bearishness, 3 months of bearishness where price uh, found its top in a monthly and weekly demand supply zone up here, and then uh, reacted to it. All right, but look at this. Remember what I've been talking about in the chat. When you see a series of light colored candles, all right, all bullish candles, but only one odd colored candle, one odd bearish candle in this case, this is where you're going to find your demand. This is where you're going to find your support if you're a support and resistance trader. All right. And where are we? Right there. Boom. Right. I'm looking for price to find its footing here and turn around into trading into this fair value gap. I know you like that, Leslie. Come on now. All right. So if we look at it on the weekly, we can see that in this demand zone, price came down, swept liquidity to mitigate the extreme of the demand zone, and we have a nice rejection there. I'm looking for some follow through on that rejection. This is We don't want to pick the bottom. All right. We don't want to pick bottoms. We're waiting for confirmation. All right. But this looks like prices corrected, found its bottom, and we may see a price turn around here. Okay. Especially if we see a confirmation that the market environment has switched from risk on to risk off. You understand? All right. When the equities didn't respond bullishly, didn't respond with buyers last week with the CPI data and then the FOMC. All right. When it didn't push up, this is an indication that for me, uh, the market might shift. And that's when I start looking at the currency futures. All right. And I want to see what are they really telling us. So let's go down to the daily and we can see how price is dancing here. All right. That there is a fair value gap here. Right. And price is dancing in this demand zone. All right. Remember, this is the demand zone here, the higher time frame demand zone. All right. And price is dancing. All right. Tap, tap. Why am I having so much trouble drawing here? All right. So it comes tap, tap, tap. This is what I'm looking for. I'm looking for that because obviously the downward momentum has waned a bit. So I'm looking for price to quite possibly break this high. Oh, I went too far. All right. I'm looking for price to break this high, this swing high. All right. Specifically here, if price breaks, you see how price swept these lows? I'm looking for the change of character to happen here. I'm looking for that high here at 105 200, 105.20. I'm looking for that high to get taken. Price pulls back and it shows respect to that low. This is the time. This is the time to start looking for long positions, to start buying US dollar. Do you understand? I just gave you timing. I gave you a level to look for. I'm looking for a particular, a specific confirmation that price is turning around. This is where I'm looking for that change of character. This is where I'm looking to start looking for price to continue bullishly. US dollar. Do you understand? I hope that is clear. If I'm not clear, holler at me. All right. Say something in the chat. Make sure you hit the like button and make sure you tell a friend. All right. Subscribe if you like being informed. Now, I'm going to take a look at gold real quick. Okay. Everybody ready to move on? We're going to look at gold. Gold futures. I'm going to take a look at the gold futures chart. Why is there a check mark up there? Why? Why? I got you, options farmer. All right. Why is there a gold? Because I talked about it last week, and I talked about this high being a level of liquidity that I believe price would want to sweep. all right, into the supply up here. All right, this is supply. There's a supply zone up here, and I believe that price was going to come up here, and it most definitely did with this heat-seeking liquidity grab here. Why am I not drawing? I don't understand why I'm having problems drawing. What the heck, man? Who's doing this? All right, it's a conspiracy. Okay, again with this. I don't understand. All right, let me try this one more time. Okay. All right, let me try this one more time. Thank you. That's a heat seeking liquidity grab. All right. And when I see that at this swing high, this is a swing low, swing high, swing low, swing high, swing low. All right. When you start, when you don't get a break, a candle body break and close above those swing highs or swing lows, when it's just a wick, then I'm not convinced that price wants to go higher. You understand? It's that simple. All right. Uh, uh, a wick doesn't. You need confirmation that if it's only a wick. This looks like a liquidity grab, and usually when I see a liquidity grab at a swing high or swing low, it's for another move to the opposite way, the opposite direction. Okay, so that's what it might be. It's the Fed doesn't want you spreading the. I got you, man. It is a conspiracy. I believe you. It's a conspiracy. They won't let me draw it. Okay. But what I want you to notice with gold, what I want you to notice with gold, look at this. This is the daily now. There is a price gap here. All right. You see how price has this very bearish and go this very bearish candle, right? But look at the bullish candle where it opens. All right. There's a price gap here. If we go down to the 1 hour, you can see it very clearly. There's no price here. All right. For me, these zones, these areas are like supply and demand zones. And I believe price is coming down to it. All right. You see this? You see this price action? There's a swing high, swing low. Not this, because it didn't take that high. This doesn't matter. This is internal. This is an internal high and low here. All right. So this doesn't matter until it breaks that high or that low. We broke the high. You understand? But it was only a wick. It was only a wick high. If it was a break and close above on a daily, then I would think price is going up. But that's not what happened. Price went down and broke this low. All right, broke this low. This is an internal low. All right, and I believe this low will be next. Price is now correcting that impulsive move to the downside. Let me get out of the 1 hour before you get confused, because I can get you confused real quick. All right, let me get over here and let me get to the 4 hour. 4 hours is pretty good. Okay. All right. So what I want you to see is that price made this low, and we broke the low that was responsible for this high. All right, that's a strong low, but we're trying to we have a candle body break and close below that low. All right, barely, but I believe price will correct like it's doing right now and continue down. Take that low, sweep these lows for liquidity into this gap. I believe that's where we're heading, and that I have the number up there, 1753. That's the area I think we should be taking shorts to. Wait for confirmation. You see that one blue candle in the midst of these white candles. All right, that one bullish candle. This is where we're at right now. Just what I finished telling you. So price may sweep these highs and then sweep these lows. So I'm looking for that. All right. So get ready to short. I'm telling you, getting ready to short gold. Get ready to short gold. All right. If price continues higher and takes out that high, then if we get a daily break and close above that high, then I'll be looking for the pullback to take high buys in gold. But I believe we are signaling with this break that price will continue bearishly. Everybody clear on gold? Good. Good. I'm going to answer for you. Good. All right. I'm going to move on to U.S. oil. U.S. oil's get in U.S. oil. Get in U.S. oil. That's all I'm going to say. All right. Because I think there's plenty of good opportunity to take profit in U.S. oil. Look at this. All right. It's been bearish, right? It's been bearish. Look, I'm going back to my whisper voice. It's been bearish. We're breaking structure to the downside. Lower lows, lower highs. Look at that swing low. All right. We come back up. Hey, you think, okay, we have internal breaks of market structure to the upside. Maybe we'll continue higher. Failed attempt to go higher. There is no candle body break and close above this high. So what does that mean? This low is in trouble, right? Boom. We take that low out. Swing low. Swing low. That's what we're coming for. Bam. We took it out. Took out that low, the short-term low. We took out the swing low. All right. Price corrects after this impulsive move. We correct and go even lower. Come on, man. Did you not take a short? Did you not pick your short yet? Well, that's okay if you didn't. Because look, I want you to notice, you see this? That is a daily downtrend. All right. Prices started here, hit it here, hit it here. All right. I got that check mark here. Why? Because last week I told you it was going to happen. All right. I said, this is the low. I pointed to in last week's seminar. If you wasn't here, shame on you, first of all. Let me get some shame going. All right. Get your shame on. All right. You want to get your shame on? Get your shame on. All right. Before this candle was here, I said we have a bearish candles, candlestick pattern here. All right. I'm looking for price to come back up, test here. That's why I drew this yellow line, put a W on it because it's on the weekly. All right. I said price is going to pull back up, and I'm looking to start to look for shorts once it does that. I'm looking for it to round over. Check mark. Check mark. It did that. Okay. Look at the daily. All right. On the daily, almost it's very close. All right. Because what you have to notice is this was a beautiful, come on, man. This was a beautiful break of the short-term low, the swing low, boom, and a correction to the breakout area. That's what this is. All right. And I marked it for you. Now, you should be in a short position here. All right. If you're not, that's okay because you're going to get another chance. I said it would pull up to that line, and it did so. All right. And I'm looking for it to round over again. I'm not looking for price to take this high out. I'm looking for price to come back to this breakout line. Okay. And come on down and take this low out. All right. If price does take this high out, it's because it's trading into this fair value gap. All right. If it trades in that fair value gap, I'm still looking for it to turn around. All right. US oil is going down, and I need you to take that short, and I need you to come back next week and tell your boy, leave a comment in the comment section and say, hey, that worked out. You was right. You know what I mean? Let me know something. Let me know I'm not wasting my time. All right. I want to make sure you're learning and catching this. All right. Let's go to the SP 500. The S&P 500 option farmer. I got you with the big thumbs up. Thank you. All right. How's my people in YouTube in the YouTube chat? Are you guys still there? Are you catching everything? Are you catching what? Are you catching what I'm catching what am I trying to say? You picking up what I'm putting down. Thank you, Leslie. Thank you. All right. So why do I have a check mark here? All right. It's because in TradingView, I dropped on the 10th, I believe, this and I put this in our chat, of course, this analysis, and I gave 1, 2, 3, 4, 5. I gave analysis by numbers. I said 1 is a bearish break of strong construction. I'll go through it right now. I have the swing swing low being broken here, all right, which means everything's bearish. And after an impulsive move, I look for the correction, and we corrected up to this supply zone here, right? And I said price would round over here, all right? The supply would signal the down move, all right? And I believe that three with the asterisk is where I put a line of liquidity. I believe that price would continue down into this liquidity, fill this fair value gap, number four, into this demand zone, number five, all right? That was my analysis. I said, we have an uptrend and we are breaking that uptrend. So I'm looking for a correction and then down. All right. That's what I put. Bam. All right. Price did some funky thing over here, though. This was a news candle. Price did, in fact, mitigate this supply zone, right? Comes down, pulls back up and takes this high, sweeps that high, but the supply zone remains. All right. The supply zone held. Price then comes down, sweeps the liquidity like I thought it would into the fair value gap, and mitigates the demand to the pip. Bing, bam. I get a check mark. I don't care what you say. I get a check mark, doggone it. All right. If you like what I'm putting down, hey man, make sure you hit the like button, okay? All right. So what do we do? What are we doing going forward? All right. Price is here now. What I want you to do is look on the 4 hour. All right. Fair value, the liquidity, all that's taken up. All right. Do I believe that price will bounce here at this unmitigated zone of demand? I think we're going to have a deeper penetration, is what I think. All right. You see this? All right. The extreme is down here. All right. Now, what I think after a impulsive move like this, I'm looking for price to correct into the fair value gap. The fair value gap is going to be the one I believe on the. Let me clean this up. On the daily fair value gap. See, there's a pretty big gap here. All right. I believe price may correct here. This is where you want to be careful. You don't want to be jumping into those shorts just based on, oh, it's a supply. Oh, it's a demand zone. You understand? Thank you, Option New Farmer. All right. You want to look for this price to correct. What did I say about the breakout zones? Price loves to come back and retest those areas where it had a major breakout. All right. And it just so happens this is an area of supply. All right. All right. It's also, you want to wait until price retraces past 50% because that gives us our premium prices. Right. So I'm looking for price to come. What is I got a whole lot going on here. I got a whole lot going on over here. All right. I want to see price correct past this high. All right. It may not only correct to that high. If I can just get this thing to cooperate. All right. We may see a sweep of this. There is supply here. Some minor supply, but there's what do you call it? Fair value gap on the 4 hour at the breakout levels. All right. And that would give us put us in a 50 percentile of this trading range here. All right, right around here. So I'm looking for price to do some corrective action, and then I'll look for a 15-minute what do you call it? Confirmation entry to take it down, because I believe this zone will be taken out because it hasn't swept uh, a significant liquidity here. So this demand zone is kind of shaky to me. All right. So I'm looking for price to come lower. All right. To get lower than that. All right. If I can get rid of this, that'd be awesome. That'd be some awesome sauce. All right. So, and I want you to also step back and look at this. This lower low, lower high, and then a swing high and a swing low. This here represents a failed attempt to make a new high. You understand? So if you can't take out that high, you're probably going to take out this low, at least reach it. So I'm looking for price to probably take this demand zone out where I had the check mark and go lower. But so we'll see. We'll see. I'm looking for the correction. I'm looking for a what do you call it? A reaction from this demand zone. I'm looking for a reaction here, but only a corrective action, and then a drop. Okay, we're going to move on. All right. I'm going to my hot list. 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 Everybody with me? You with me? Oil is a big deal. You got to do it, man. Oil is a big deal. Yes. Option farmer. All right. And look for confirmation to go up. Right. Picking up what you're putting down. That's it. That's it. That's it. Leslie, you're on it. You're on it. Okay. Now, what's at the top of the list? I already did specs. We're going to work our way up. That's what we're going to do. No, we're not. No, we're not. Yeah, why not? All right. All right. I already did oil. I already did oil. I did specs. I did. Did I do silver? I didn't do silver. I did gold. I did gold. Where is gold? I saw gold on this list. Doggone it. I lost my gold. There it is. Right there. All right. All right. Okay. And I'll do silver real quick. All right. Silver is a good one. I'm telling you, silver is a good one. All right. Let's go to the daily. We're going to do this real quick. All right. What I want you to see is how has price been? Let's look at the weekly. All right. Oh, God. All right. Price had an impulsive move to the upside, breaking market structure here, right? Broke that high, took out that high, and this area of a major breakout, we're over here testing it, right? Good stuff, basic kind of stuff. All right, sweep the high here, great, but price did not give a candle body break and close above that high, right? And so what does that usually mean? The low is going to be threatened. Price travels sideways, and then we finally sweep that low. Look at that. All right. Once we get a candle body break and close, though, it's definitive. Bam. All right. And we come down. Price corrects that impulsive move, and I'm looking at an unmitigated zone of supply. This was swept, and then we formed. I like this zone of supply, and I'm looking for price to give confirmations for shorts here. We are in premium price of this trading range, right? Above the 50%, right? So I'm looking for, you see that we already have a bearish reaction here. Price could mitigate higher into this. This is that we're looking at the weekly chart. Let me get back to a daily. All right, I want you to see how price has this nice bearish engulfer at the mitigation point. All right, and we did get a little follow through here. All right, on Friday. All right, and I'm looking for price to take this low. If price takes this low after sweeping this high, mitigating the zone, and then if we can get some follow through to the downside to break that low with a candle body break and close, I'm looking for price to pull back up. So we have a head and shoulders, and then price will round over. All right, that's what I'm looking for. I'm looking for that follow through. Here we are. There is, if you can see it pretty clear, there is a fair value gap that price can trade into, and I'm looking for price to either respect this high or take it out. If it takes it out, then I'm looking for price to maybe move, what do you call wick towards the middle of the zone, all right, and respect that middle of the zone, and then come right back down. If it does take this high, but I don't know if it does. All right, there's a fair value gap to come and get, to come and fill here. All right, and we might see price sweep high, and then give us a the break here, and that's when I'll look for that pullback, and I will take it down. All right, but it's going to give me this. It's going to give me that. You understand? That's what I'm looking for, and it's going to give it to me from here. This zone is going to hold, and I'm looking for to short a silver, just like I'm looking to short gold. All right, but you got to wait for confirmations. That's all I'm saying. Look for a confirmation that price does intend to go down. All right, and this is the confirmation. Boom. All right, sweep of the high, then a sweep of the low, a break of market structure low, and then a pullback into this leg, this impulsive leg. That you want to see that correct into that impulsive leg. This is where you're going to take your high probability trade to the downside. Hope I explained that clearly, because I think it's very clear. Let's look at US dollar CAD. Let's look at US dollar CAD. I already told you that the CAD is one of the ones that I'm looking to go against, because it's one of the weaker ones. All right, it's one of the weaker ones, and it is a commodities based currency, just like the Aussie is. And I believe that we may be seeing a shift in the markets from um, uh, uh, risk on to risk off. Okay, I'm very clear about that. I'm very clear. All right, so US dollar CAD. All right, if the CAD is going to get weaker, the US dollar is going to be on the other side of that, of course. Losing my voice. All right, so what we have here on the daily, what we have here on the daily is a lovely head and shoulder, right? Very nice. All right, played out well. The measured move was here to here, and that measured move happened down here. Very good. All right, already played out. However, this is an uptrend. All right, this is an uptrend. As you can see, we're breaking highs on the way up. All right, we're breaking highs and and preserving and safeguarding the lows. Okay, price isn't getting no lower. All right, it corrected this impulsive move. It corrected, and now you see price going back up. Now, what does this mean? What does this mean? Look at this. Look at this. All right, this is the mitigation of a, a supply zone here. How many times it has to be mitigated? Actually, we're looking for bearish follow through, and we got bullish follow through. This is 2 days, Thursday and Friday. I'm looking for more follow through this way. I'm looking for price to come up here and sweep that high. That's what I'm looking for. I'm telling you, that's what I'm looking for. US, I'm telling you, buy. I'm looking to buy this market. You understand? But I'm not just jumping in. You can't just jump in stuff. All right. You jump in without looking, you get burnt. Okay. So what do we have here? What I want you to notice is this low, this impulsive move to mitigate the zone, the reaction from the zone is a correction of this impulse. And then price fights to get higher, fails, sweeps that low, and you're like, oh, okay. However, in this leg of this leg of structure, all we did was pull back further into discount, just a little further. All right. You would think there would be some more bearish follow through from here after this looked like an impulsive move here. But what happens? We did. It did give that impression here. You say, okay, I can take my short here. Price didn't take this low out. If it doesn't take the low out, the high is in trouble, and that's exactly where we are. And I'm looking for follow through. That's it. I'm looking for follow through because I think this is going higher. I think the market is shifting to risk off. So this makes sense to me. All right. And I want you to also notice, if I can get it. All right. I want you to also notice that we have a 4 hour uptrend. You understand? We got a 4 hour uptrend. All right. This is the kind of stuff you start saying, okay, if price comes back down to the demand zone, all right, uh, with the way this is trending, you would look at it. You would look at when price starts to sell off and then pulls up. Price did come back down to that breakout area. You understand? In this uptrend. So you use your confluences. That's all I'm trying to get to you. You use your confluences, and we broke structure to the upside. This is bullish. So do I tell you to take a buy from here? No, wait for it to come back. I'm looking for a pullback. If it comes up, takes out this zone, and then pulls back to the demand zone that is left behind, this will be a high probability trade to the upside. All right. Wait for your confirmations. Wait for your setup. That's all I'm saying. All right. We're gonna move on. Aussie yen. This is one of my best recommendations. One of the best ones to look for next week. You heard it here first. You heard it here first. All right. You heard it. You heard it. You heard me. Well, I want this stuff just disappear when I ask it to disappear. Okay, we're gonna go to the daily. All right. What am I looking for? What am I looking for? I'm looking for shorts. Why? It's the Aussie against the yen. The Aussie is a commodities based currency. The yen is a safe haven. This is the perfect two to put against each other. And if I see the market might be shifting from risk on to risk off, I'm looking for uh, 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 risk off to the risk on to risk off. I'm looking for the two that epitomizes each asset class, the commodities base against a safe haven. Do you understand that? Does that make sense? All right. So look at this. Look at the daily. This is going to be. I'm going to make sure this is simple. You see, this is we are in an uptrend, right? Too easy. Too easy to see, right? Too easy to see. We got an impulsive move. We got an impulsive move. A correction. Impulse. We'll break the high again. Ha! Correction. All right, down to here. All right. And then another impulsive move. Breaking that high. Ha ha. Correct. Correction. All right. And then something interesting happens. We fail to go higher. All right. This correction starts to look like uh like it normally looks until it does this. This look like this impulse gets corrected, right? But it looks like this correction ends impulsively here. That's what I'm trying to say. Now, let's take a closer look at that. Look at that candle. Look how it's a that drives me crazy. Looks like this is a very bearish engulfer. Very bearish engulfer. I love bearish engulfers because they give clarity to the markets. All right. And in a downtrend, when things are trending down, it confirms that price is going to continue to go down. We got that confirmation with the next candle. All right. We got a daily break and close below that low. All right. We're challenging this low here. And price corrects. This is corrective structure here. All right. Into this trading range. Premium price. This is where you take your short. Easy. I believe that we're going to see more follow through. That's it. We're going to see more follow through just like that. All right. We're going to take this low out. We're going to take this low. We're going to take this low. All right. We already took that low. All right. And we're going to trade into this demand here. All right. I believe this wholeheartedly because there's a lot of liquidity here. And the fact that look how price had such a time getting past this area, support, resistance, support. We're going to take this out. And once we take this low, and this low out, price is going to accelerate down. I, I don't think we're going to see a lot of resistance from here. I think we're going to see a pullback after an impulsive move, and this is where you're going to take your short. If you're a swing trader, that's what I suggest. Okay, wait for the pullback after these lows are swept for liquidity. Wait for the pullback to this area. This is going to be a high probability trade to the downside. Hope you're catching my drift here. Hope I just hope you catching my drift. If we can see, if it's clearer, if it's clearer, my skin is getting clearer. All right. If it's clearer here, you can see what I'm talking about here. All right. Here, here is if I can just get my life together over here for a second. All right. You can see that's what I'm trying to get to right here. All right. You can see price comes up and mitigates this zone on the 8 hour, right? And you can see how it just taps and goes. All right. Sweeping all of this liquidity. And it will complete the sweep. This is just beautiful price action. It's clean, easy to see, corrective, and then another impulse. I'm looking for this impulse to continue down. All right. Look for this, that, that odd colored candle. Look for that one to quite possibly be the area that price corrects to. And this will, ah, why? Did I pick the wrong one? All right. All right. This will be an area that I would look for price to quite possibly to once it sweeps, man, I can't do it right at all today, man. It's not reacting right. Seriously. All right. Once it sweeps this low, comes past here, I'm looking for it to quite possibly correct here. Just correction, a corrective structure, and then come down. Okay. It may just continue to drop from here. I don't know, but I'm looking for a pullback. I'm looking for some kind of pullback, a bear flag, and that I can get involved. Okay, I'm going to go to Aussie USD. Aussie USD is even clearer in my opinion. We go to the daily. I want you to see that on the daily we have one peak, two peaks, three peaks. That's a daily downtrend. All right, we have a daily break of structure here. All right, daily break of market structure. All right, we had a nice. You see these. This was a nice internal. What do you call it? Inverted head and shoulders. Played out lovely, but we see the push. We see the correction into this supply zone. All right. Why is that important? Because if we go down to the 4 hour, you can see that supply zone is strong, strong. All right, price comes up into it, mitigates, gives the taps the downtrend, the daily downtrend that I just finished sharing with you, and we can see how price is coming down from here. Okay, breaks market structure here to the downside very impulsively. And I gave this analysis on Thursday and Friday. All right. I was thinking that price would start the corrective process here, but it kind of went dead here. All right. But I'm looking for that correction. I'm looking for this sweep of this high into this zone and then push down. All right. After every impulse comes a correction and then a new impulse, right? Now, what I want you to watch is this arrow right here. Look out for that high, the high of this zone. All right, be careful with it because price may want to wick past it into the fair value gap here and then come down. So just be careful. Look for your confirmations for a short here because I believe this low, this low, this low, all of that will be swept for liquidity. Do I need to go any further on that? No, I don't. Down to the demand zone. This should be your TP1, but I think this may be one to hold. I believe it may be one to hold. at least to the midpoint of this zone. But there's a lot of pips to get there. Okay, let's go to pound USD. Pound USD, pretty clear. And what makes me say that? Because because I said so. That's why it's pretty clear, doggone it. All right. So what do we have? We have price making lower lows and lower highs all the way down. Right. Then we finally get this rally. All right, where price starts breaking internal highs and correcting this last move. All right, we actually sweep the high into this supply. All right, but we have hit supply is the important takeaway here. We have hit supply. This is an impulsive move. If I can get rid of this, I can't do it, can I tried to, and I can't. I just can't. All right. So this is the COVID low here. All right. Price. This is the breakout area. Come on. You know what? I'm having a little trouble functioning here. All right. Bring your market start. All right. We broke the COVID low, traded below it. All right. And after a break of market structure, you expect a pullback. Pull back here. And we pull back to where? To supply. All right. This impulse, this correction, this impulse. We're at that impulse. All right. Price is corrected up into that impulse. And I believe that's a weekly. All right. If we go to the daily, I believe the bearish reaction is going to see follow through. No wonder I got so many things. See that bearish candle from the extreme of this supply? Look at this. Look at it. It's very sharp. So I'm looking for the follow through. That's a bearish engulfer, man. All right. So we may see some correction. And that's the theme of this thing. We may see some correction. All right. I expect to see some correction after an impulse like this. It could continue to fall here from here. Sure. All right. But I want to get involved once it trades back up into this fair value gap. That's a fair value gap. And this is an impulsive move. I'm looking for some correction of that impulsive move. All right. That's the way the market works, right? Am I wrong? Am I wrong? All right. So one of the reasons why I thought this was a good place to look for shorts is because all of this liquidity being built up here. And look what price did. Came back and said, yum, 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 into this demand zone. Do I think this demand zone will hold? Well, it did sweep. All right. And it did lead to a break of market structure here. All right. But this is a higher time frame mitigation of supply. And I believe all of this will be taken up into this zone, which is unmitigated. Got it? Good. We have a prices looking very heavy here. We had 2 more days. I mean, we had bearish closes on these candles here. So I'm looking for price to take out this low, fill this gap, and mitigate this zone. Look for sells. That's all I'm saying. Euro USD, same deal. All right. I'm going to go through this a little quicker because we've hit the supply. All right. And price is corrected up into it, just like the pound USD. All right. And I'm looking for price to continue bearishly. This is 2 days of bearish candles after it mitigated the zone. I'm looking for this low to be taken. All right. Once this low is being taken and we get a pullback, this will be a great swing trade to the downside, in my opinion. All right. I'm not looking for day trades myself, but there's going to be some day trades to take for sure. All right. If we go to the 4-hour, you'll see a weak zone of demand here. All right. Look at the displacement. Look at that fair value gap, and price is trading right into it right now, sweeping that low. I'm looking for price to continue low. You see all of this? That's liquidity, and I believe price will come forward. That's it. We have a demand zone down here, and I think there's a fair chance that price may make it down there. There is demand zone right here that is unmitigated, and I believe this would make a great, if you can get involved here, if you can get involved up here, somewhere in this area as price comes down, and we may get a reaction here and pulls back. This will be the area to take a trade, and this would be my TP, and that's my idea. All right, NZD USD. Let's check out NZD USD. Are you guys still with me? All right. If you like what I'm doing right now, leave a comment, say something, say hi, say you are high if you think that's going to work, or 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 like and subscribe. Do one or the other. You know what I mean? Drop me a comment, okay? If we look at NZD USD, we have a very similar situation. I told you NZD is one of the ones that I'm looking at because I think it's about to turn over. All right, and against the U.S. dollar, that would mean the dollar would have to gain strength. Hey, how you doing, Casey? All right, how you doing? All right, option farmer, I appreciate you digging it. All right, look for confirmations. All right, Leslie, are you still there? Trader X, my man, good to see you. Good to see you, Trader X. All right. Uh, I always appreciate when you show up. All right. So when on the daily, what can we see? All right, Leslie, I got you. Uh, on the daily, what can we see? We see easy on the daily break a market structure here to the downside. That means we're bearish, right? And we're looking for price to come back up into the upper half of this trading range. All right. And we'll look for a lower high to be formed, some kind of lower high. All right. Now, why do I like this zone up here? Why? Because it swept liquidity, right? It led to a break of market structure. All right. So there's some strength to it. There was some inducement here. All right. And that's one of those are the things that I love to look for. Right. Price did come back up, sweep that liquidity, and did mitigate this zone. That makes this zone already mitigated. That means it's a little weak. All right. But there was a sweep here. Price could go up here and sweep higher. No, there is no doubt about that. There is potential for that, but it was swept. All right. And we sweep these highs with a wick, right? And then we have a bearish engulfer. Oh, I love those bearish engulfers. I already told you I like those bearish engulfers, right? So I'm looking for price to continue past here. If price, uh, you know how price likes to make these bearish engulfers and then correct them, right? I'm looking for that correction up here. I'm looking for price to correct up here. And if I can get involved up here, I will take this down to Chinatown. Okay. All right. At least down to my first TP, which would be this demand zone here, which is unmitigated. All right. Not the strongest because it didn't sweep liquidity. So I believe it would fail. And maybe we come down here. All right. Down to these areas. That's what I'm looking for. I'm telling you, I believe once price breaks these lows, we're going to see an acceleration. All right. You heard me say that, right? You got it? I hope you do. All right. Let's look at the 4 hour. Let me make sure I'm not missing anything. All right. Look at that. This is the low that is responsible for that high. We swept, right? Swept liquidity, mitigated the zone. This is a perfect area to look for price to turn around it. Then price impulses bearishly, breaking market structure to downside, and we are already in correction. I believe we should take that high and come up into the fair value gap. If we correct up here and we hold here, I'm looking for a 15-minute confirmation to take this thing down because this is liquidity, baby. This is liquidity. And you know I love me some liquidity. This will be TP1 for sure, but I believe we may take that low. All right, but TP1 for sure. I got a lot of things happening here. I got a lot happening here, but you understand what I just said? I repeated it for you too. Now, come on. All right, your boy can't do but so much. Aussie Swiss. This is one of the stronger ones. Hi there. Hi there. I got you. I got you. I got you. All right. Yep, still on board. All right. All right. All right, Casey. All right. Option Farmer. Thank you for tuning in on TradingView. All right. Aussie Swiss. This one is simple. You see all of this? That was a range, a long time range. We finally broke through it. You think price is not coming back up here to test it, to correct this move? Yes. And I believe this is going to be the area I will look for confirmations to take short. It's that simple. All right. We actually swept that low, swept the swing low here. All right. Giving us fuel for the correction. I believe this correction will allow us to look for a very nice short setup. Okay. Let me go back because I just lost it. We're going over here to the daily. All right. Yeah. All right. That's a very impulsive move. It has to be corrected. I'm looking for that correction right around 0.62862. All right. Somewhere around here. All right. And um, we have, I'm going to look at this zone here. I'm going to look at this zone right here. I'm going to look right here. All right. I'm looking for price to come up in here. All right. So let's see. Let's see what happens. All right. We're looking for the correction. We're looking for the correction. And then the turnaround. Boom. Got it. Let's go to NZD Swiss. NZD Swiss is another one strong one. Remember what I already told you about the NZD and what I told you about the Swiss when I went over the futures. All right. If we go to the daily, we can see it's very, very clear. Can you see it? Swing low, swing high, lower low, correction, new impulse, right? This is all that is. Impulse, correction, impulse, correction, impulse. We are in correction right now. All right. Where are we going? Where are we going? What do you want to do with this? Anybody got any ideas? I told you NZD, Swiss. NZD, Swiss. What did I say about the Swiss? What did I say about NZD? They're on opposite ends. All right. They're on opposite ends. All right. And we are correcting into this range right here. All right. How did we end the week last week? Bullish. All right. Price did come down, but we have a bullish candle at the end of the week. All right. Why? Hmm. Well, we got a demand zone right here. Price is responding to that demand zone in a very strong way, in my opinion. All right. I like this. I like this. I like this to go up, to be honest with you. I like this to go up. All right. Yeah, we had a sweep here. All right. Price comes down, breaks market structure to the downside. All right. But I do believe that price will continue up higher. I do believe price will continue up higher. All right, because if we look at this, the Swiss, we look at the Swiss futures and the NZD futures, it is what it is. You know, I like what it seems to look like. Let me look at the 8 hour. I'm going to show you something. All right, if we draw the extreme of this zone where price is starting to come down, I'm going to draw it right here. Right. Oh, come on, man. We can see that price comes down, trades into this extreme. Hold on, man. Oh, let me put that right here. Yeah. Price trades down into the extreme. All right. And depending on where you are, it's very close here. All right. And we have a very impulsive kind of correction. This is not corrective structure. This is impulsive. All right. And I do believe in as price is trending up here, you can see prices moving up here. I mean, this is an uptrend on the 8 hour. All right. On the daily, we can see prices trading back up into this zone at this level. We come down, but we didn't get follow through to the downside. You understand? If this was corrective, I would look for the next impulse to the downside, being that this was, making lower lows and lower highs. That's not the case. We're looking at it, and I'm gonna sit back and wait for a confirmation. All right, but this looks corrective, and this looks like we're gonna take these highs out. All right, for me, because the price didn't come, we have a bullish break of market structure, and actual higher high, technical higher high here, and we finally get a correction. We are correcting this move. You understand? We are correcting this move, and we are in the um, the discount of this move. So I'm looking for price to continue higher. So what am I proposing? Buys. All right. And what would I wait for? I wait for price to come back down. I'm looking for price to correct this impulsive move. I'm waiting for price to come back down because I think it's going to take these highs out. It's already pulled back enough to show that. All right, pull back enough, and here we are. And these are impulsive candles, in my opinion. So I'm looking for a price to give a pullback, trade it into fair value, and all that good stuff. I don't think this is a very strong supply. All right, I'm looking for a price to give a weak response, a weak correction, and then up. But I need to see um, confirmation. I need to see confirmation. So let's see how this thing develops because I think NZD Swiss is likely. What the hell am I thinking? NZD Swiss. I obviously I'm starting to get tired. I'm about to end this thing. I'm about to end this thing because that is not. Uh, I believe this is going down to 550. I just glanced at my notes. I gave the wrong damn thing. It didn't give something. I went right past. I'm sorry, y'all. I apologize. All right, I'm trying to get. I don't have any. I drank all my juice during the first fake webinar I gave earlier. 2.5 hours into nothingness. All right. So what I wanted to point out is we didn't get a candle body break and close above that high. All right, a daily break and close above this high. So I don't have evidence that price is going to go up. So if we can't take out the high. All right, yeah, we swept that high with a liquidity grab, but that that's on the daily. All right, but the candle body break and close came below this market structure. I'm looking for follow through. This is impulsive. I'm looking for maybe a little bit more correction, maybe not much more. And then I'm looking for follow through. I'm looking for this low and this low to go. I'm looking for this high to hold. I hope everybody uh, can bear with me. I'm a bit fatigued. I'm sorry. So while this demand zone that I drew out, and all of that is valid because that's what we're reacting to, but we've already tapped into the midpoint of this zone. I'm looking for price to give me that follow through. I don't know what I was thinking about. All right. And if we come here, if we go to the daily, I want to mark out this zone so that it's obvious. Top of the zone, here, here. All right. I just did it wrong again. All right. Thank you. All right. All right. So if we price corrects into this zone here, maybe sweeps this high, maybe sweeps that high on the 4 hour. Let me see. Yeah. Yeah. There's a different color candle in there. All right. So if price sweeps this high, we start trading higher into, sorry, we start trading higher into this zone. I'm looking for it to turn around. And again, I'm looking for price to do this. All right. That's what I'm looking for. All right. A sweep of the high, a sweep of a high for liquidity, right? A break of market structure here, right? This impulsive move gets corrected, and that is the high probability trade to the downside. All right. So that's what I'm looking for. I hope that's clear enough. We've corrected, and I'm looking for the turnover. That's it. Gosh. Actually, I think we're at the end of it. I think that was the last one. Yeah, yeah. I did oil. I did SP, the equities, the SPS, SPX, and all. And it is now 4:50, and we're about 10 minutes from market open. Okay, I'm going to sign off here. I want to thank you guys for showing up. This is the last live that I'll do for 2023, 2022. Excuse me. This has been my, uh, from me to you. This is my has been my best trading year ever. I went through a summer where I didn't have a losing week, and I mean this was just an awesome, awesome week, awesome year for me. And I'm looking to make next year one of the best. I mean, I'm going to make some very hard decisions next week, next year, and I would love to take guys. I would love to make my breakthrough into a bunch of different areas. All right, and I'm talking in generalities right now because I don't want to get put it out too much or whatever. But where if I get to where I'm going to get, I'm going to be offering a lot of free stuff. All right, uh, not like what I did for this past year. All right, I offered a lot of free mentorship, a lot of hours, a lot of man hours, and trying to help just on some old. I'm trying to make sure people are trading better. All right, and I put a lot of hours in that, and it became distractive to me, to be honest, and it affected my own personal stuff, and I had to stop and concentrate on some personal items outside of trading and my personal stuff, and my own trading. But I want you to understand that I'm trying to get to a point where I can offer some free stuff where it won't affect me. But I'm going to have a different approach. I'm going to have doing things a little differently, and it's not about paying. It's not about you. I got to get something out of you or something like that. That's not what I'm talking about. But I'm just glad that some of the familiar faces who saw me grow uh, are here, and I really appreciate the subscribers to this channel. All right, and I want to thank you for 2022. All right, this is a banner year for me, and next year, 2023, I'm looking to make others rich. Okay, I'm looking to make others rich. All right, come with me if you care to. That's all I'm going to say to you. Okay, I'm looking to make other people rich. All right, follow me if you want. If you don't, that's fine. You can do your thing. All right. Hey, David, you're more than welcome. David Portaro, you're more than welcome. And Leslie, of course, my hand over my heart. I got you. Trader X, my main skizane. All right, and drunk is always going to be the Godfather. All right. Uh, Thank you, Casey. Thank you, Option Farmer, for making Trading View worthwhile today. And I'm going to go ahead and um, end the video for our YouTube members. Again, I will see you. Do drop me a line. Drop me some comments in our chat or in um, uh, the comment section of this this video. Once it's posted, let me know how your week goes, because I'm thinking that this week is going to be filled with opportunities. The next 2 weeks are going to be filled with opportunities. It's not going to be the slow up at the end of the year, last 2 weeks of December that I always talk about. You should not trade and all this other stuff. No, these next 2 weeks, I think you're going to have plenty of opportunity to make some good scratch. All right. So I'll see you guys on YouTube. I'm going to end the stream, and thank you again.